Hey guys, Keel here, and welcome back to another episode of The Trading Edge. If you guys are brand new, thank you for joining me. I'm a Forex trader, a trading coach, and one of the co-founders over at tier1trading.com. If you want to know a little bit about my background, more about how I got started and how I went from consistently struggling trader to consistently profitable trader and now coach, make sure you check out my podcast. It's called The Trading Coach Podcast. Go all the way back to episode 0. It's titled, Who is Akil Stokes? And you can hear my journey and how I got to where I am today. Just don't mind the weird intro music. It was a very experimental time in the podcast. But what the Trading Edge is, it's a weekly video that I do providing you, or at least my goal is to provide you an edge in the market. And that edge can come from many different aspects, right? My plan is to walk you around the market, show you the best trading opportunities that are on my radar. Usually I say all of them, but last week's video ran about an hour, so we're gonna focus on the better ones. And also give you a heads up about what's on the radar as far as news and what effect you can expect those events to have on the market. And the edge comes in a few different ways depending on what type of level you're at as a trader. The edge could be me looking over a pair that you may have not have had on your radar, but now because I've done analysis on it, you see something that you didn't see before and now it's on your watch list. The edge can be maybe you just lacking confidence, you having something on your radar, but you're thinking it might be this, but you're not confident enough to follow through with it. And perhaps by seeing my analysis and maybe I agree with you, I'm looking at the same thing, that gives you the confidence to go ahead and pull the trigger when that trading opportunity comes. Again, it doesn't matter what your edge is. What I hope to do is help you out some way in your trading. Typically, we'll throw in a psychological lesson as well, mainly because trading psychology is really the more important part of trading versus the technicals. But you guys watching the videos, especially on YouTube, love the technicals, so we want to give you that analysis as well. Now, what I do is I split this video up into 2 parts. There's a full version and a YouTube version. The YouTube version means we're going to focus on a single pair. That way not to overwhelm you with information, since many of you guys are newer traders. But if you are a member on our platform, whether you're a month-to-month member or whether you are a trial member, you're going to get the full version of this. So if you happen to be a Tier 1 member and you're watching this on YouTube, head over to the platform and make sure you watch the full version of this video. Now, I mentioned before to some of our traders that I thought it was going to be a busy summer, and so far it hasn't disappointed. So far it's been a very low volatility year in the market, but the reason I thought it was going to be a busier than normal summer is, for one, this year is eerily similar to 2014, and that's what happened in 2014, but also we have a lot of fundamental news events coming out. A lot of big decisions being made. Those decisions are happening during the summer where the markets are typically a little bit thinner, and that's just a combination for higher volatility. And 3 weeks ago was a very big news week. 2 weeks ago was kind of dull. This past week was a very big news event week, and then this coming week is going to be a very big one as well. And it's important to be aware of that, not necessarily for trading reasons. Yes, some of you guys like to use that as a part of your analysis to go for that home run trade, but it's also good to be aware of when I should be out of the market and when it's better just to keep my powder dry, keep my money safe. So if you guys are a premium member or a trial member, we're going to start off by taking a look at another busy news week to come. And if you're watching here on YouTube, we're going to hop right into the charts. I'm going to pick out one of the pairs we looked at and walk you through. Wait until the market shows us its hand and then react and execute the trade that way. Next, let's head over to the Euro Aussie. Euro Aussie here. Let's get this chart out the way. And we'll start and kind of see one of the things that's on the radar right now. Let's start on the daily time frame, just get a perspective of what Euro Aussie is doing. Right? This has been one of probably the bigger discussion points in the live room as of late. We've had traders really on both sides. I've talked to a handful of traders that are like, man, we got to get long, we got to get long, we got to get long. We've spoken to a handful of traders who are like, no, we got to get short, we got to get short, we got to get short. If you ask me, my reaction has been consistent. I'm not interested in either one, right? Because of that wick, because of that zone of uncertainty, I see no reason to predict that the market is more likely to go bullish versus bearish. I see no reason to predict that the market is likely to go bearish versus bullish. So for me, it's kind of just a stay out until the market gives me a clear picture. But one of our traders in Thursday's live room brought up an interesting scenario. And if we go down to, you're going to see when we go down to the hourly. Let's see if I want to go to the 240 first. You'll see it when we go down to the 240 actually. And he was looking at sort of an aggressive reason to get short. And he saw price action roll up here. He saw the brief retracement that we put here. He saw the higher high, higher close here. And then he saw the violation right here. And again, if we look at this on the daily, it's a massive engulfing candle, right? Easier seen if I would have looked at it before drawing it on. But you can see this massive engulfing candle. And for you guys that have taken the foundation course, right, what else do you notice here? Not only is this an engulfing candle, but what else do you notice, right? If I just answered an email for Daniel, he literally sent me a chart and wrote out a story for each of the candlesticks, right? What is the story that this tells you, right? Look at the wick to the upside. Look at the close to the downside, right? Very strong bearish candle. Not only do we close near very close to the absolute lows, but we have that high wick test, which shows the selling pressure that existed up there. And for you guys that may be new to the platform, that are maybe thinking about rushing through things or skipping around, you decide to go past the foundation course because you're saying, oh, Akil, I know about candlesticks. I know open, high, low, close. Trust me, and I'm sure our traders on the platform will attest to this. Go back to it, right? Not only is it a refresher, but it's a different way of looking at the market. It's a different perspective. And sometimes, even though it may not be new information, if you already have a lot of experience, sometimes looking at the same thing from a different angle and a different light with a different perspective can provide you, or can help give you a better edge on the market. And we've had lots of experienced traders that have come through the platform, go through that course and be like, you know what, I never looked at it that way. And creating that story gives me a little bit more of an edge as far as creating my trading opportunity, to kind of combine that with the intuition. So I highly recommend not skipping over any part or any one of our courses. Watch all 7 of them in their entirety, but definitely don't skip over that foundation course, right? This is the foundation of price action trading. Price, and it's kind of its smallest element, the candlestick. So our trader was looking at this. And he was looking at, again, the move higher, retracement, higher high, higher close, and then the break below, close below right here as being that bearish rotation, and really the first sign that he can look for a potential short. And what we're doing here is we're given a complex pullback, right? We've come up, we've retraced, we didn't quite get the follow through, but we're doing a secondary pullback. So if you're someone that is maybe interested in this short, but maybe it's too aggressive for you to take from a price action perspective, what we have here is going to be another advanced pattern formation, right? If we look at this formation, and I kind of drew it out just by measuring the ebbs and flows in the market, but if we put on our pattern recognition tool and look at this is going to be our impulse leg, X to A, that first violation down, that rotation. This first retracement is going to be our A to B. The failure to make lower lows is going to be our B to C. And if we continue a little bit higher, we're going to have a decompletion and once again another bat formation. So this can be used as an entry reason. Again, Euro Aussie, like pound yen, is another one that has a pretty big ATR. So you're looking at about 62 pips to target 1, 60 pips to target 2 if you're looking at this on a 240 chart. So that's about a 1-to-1 risk reward. You can probably get away with looking at this on an hourly as well. Let me just see real quick, and you'll see the difference that makes to your ATR. Now I tell you what, I had to pause the tape and reset because something just we had an interesting situation here on the 60, right? We're talking about going down to the 60 and looking at this as same thing as a bat pattern and perhaps getting a smaller risk, right? Because that ATR is about 22 here on the 60, where it's about 40 on the 4 hour. So it's about halfway as much as the 4 hour, which means you can reduce that stop by half. But you know what? This is not going to be a bat pattern for me on the 60-minute. And this has a lot to do with, I talked earlier about the cool thing about advanced pattern formations is the black and white nature, right? Either it hits this level or it doesn't hit this level, right? Black or white, yes or no, no kind of room for thinking. But there is a difference. You still have to be knowledgeable about reading a price chart, being or having the ability to understand and ID the ebbs and flows in the market. And a lot of traders get in trouble because they rush past this point. Just like I said, people rush past the foundation course and learning about candlesticks. A lot of people rush past how to read a market, right? Yours truly did the same thing when I first started trading. I didn't really care about reading price action. I wanted to skip right to the strategy because in my mind, right, the sooner I learn the strategy, the sooner I can make money. And I don't really care about this price action stuff. Just tell me the rules for the strategy. And when you skip over that, you really do a disservice to yourself. And one of the reasons is because of situations like this. Perfectly valid on the 4 hour, but let's say you're going down to the 60 because you want to reduce that risk and put yourself in a better position. This would actually not be an advanced pattern for me or a valid pattern for me on the 60. And before I draw it in, who can guess why? Let's see how good your eyes are. Who can guess? Well, on the 4 hour chart, right, we're looking at something like this: an X to A, an A to B, a B to C, and a C to D. However, here on the 60, for one, you can, either way, you can look at this as a single impulse leg. You can also make the case for breaking it up into two if you have a butterfly at market, or you had one and already completed. But if we're looking at this ebb and flow, here's what I read, right? I see a low right here that is lower than this. And what that would do for me is it would make this my C leg. Now on the 4 hour, we don't necessarily see this retracement. This whole thing looks to be one single move up. However, on the 60, it's pretty clear to me that we have our move up, we have our retracement, right? This doesn't hit the 50%, I believe, right? So it doesn't hit my requirement for a bat pattern, nope. And then we have a secondary retracement up like this, right? So in order to make this, it's going to get a little bit confusing. I hope this isn't the one that goes on YouTube. If it does, I apologize for confusing you. But if this is our original B, right? If this is our original B, and we then retrace, let's put it this way to make it simple. If this is our original B, in order to shift our B leg from here to here, I would need to have a lower C. And the fact of the matter is we do not put in a lower C. So I cannot shift my B leg from here to here, making this an invalid pattern formation. And if this doesn't make sense, we do have our Q&A on Monday, guys. We can feel free to shoot me a message. We can talk about this in the Q&A more. I know shifting patterns is always a pretty popular request. But yeah, just a good example of the importance of being able to read and interpret price on a consistent basis. And also a good example of just, it's a good example of something. I'm having a brain fart right now. Another good example of just the differences between time frames, right? Time frames will tell a different story. Sometimes that story will all line up. Sometimes it's going to be different. And what's important is you don't want to fit the story to your narrative. And sometimes we'll see this where a trader that doesn't have rules, or maybe has rules but doesn't follow them, they're supposed to be trading on the 60. They're watching this video. They say, oh man, Akil, I had this as a bat pattern. I was all ready to get short, but now you ruined it for me because you said it's invalid. And although I don't want to, I kind of agree with you. But I'm just going to go to the 4 hour and use that as an excuse. I'm going to go to the 4 hour because it's valid there. And that's what, that's the action that I can take to do what I want to do in the market, which is, have you heard that before? Have you guys ever done that? You do something in order to accomplish what you want to accomplish. Well, the problem is, on the 4 hour, now they've just doubled their risk, right? So they're not used to taking patterns on the 4 hours. So they're used to a certain stop amount. Now they take a 4 hour pattern, they lose, that loss makes up for more of their wins. now they're in a bad position with trading, and it can just lead to numerous mistakes. So interesting pair here. Maybe this is the one I'll make the YouTube cut and make a pretty good lesson, but interesting pair. Valid here for my eyes on the 4 hour for sure. On the 60-minute, would not be one. Would not be one on the 60. All right, so I hope you guys enjoyed this video. If it was a little bit too short for your liking, here's what I want you to do. Head over to tier1trading.com. We have a bunch of free training that you can sign up for. Our emergence course comes free with your trial membership. We also have free webinars such as Trade the Measure and the Ascension webinar. Just go to the website, click on, I think it says I want free stuff, and sign up for that. And that shall consume you until I see you next week. All right, until then, plan your trade, trade your plan. Please remember to like, share, and subscribe. Be on the lookout for Trading Coach Podcast episode 200 coming this weekend. And I wish you guys a great weekend, and I wish you guys a safe trading week ahead. All right, take care.